Dalal Street Dark Monday, 14 lakh crore wiped out in global storm. As the opening bell rang on Monday, March 23, the optimism of the previous week didn't just fade, it evaporated, leaving Indian investors staring at one of the most brutal single day sell offs since the pandemic. The Indian stock market suffered a massive dark Monday as the BSE Sensex plummeted by over 1800 points, while the Nifty 50 sliced through critical support level to settle at an 8-month low. The carnage was absolute with all 30 Sensex constituents ending in the red, effectively eroding nearly 14 lakh crore in investor wealth in a matter of hours. The Hormuz ultimatum and the oil shock, the primary catalyst of this financial earthquake, was a weekend of dramatic military and diplomatic escalation in West Asia. Following a 48-hour ultimatum forum, the United States regarding Iranian energy assets, Tehran issued a chilling out counter threat. The total closure of Strait of Hormuz, this maritime artery, is India's energy juggler, carrying over 60% of its LPG and a significant portion of its crude imports. Market participants who had previously hoped for a diplomatic breakthrough are now pricing in a structural war premium. Brent crude surged to $113 per barrel, sending shockwaves through India's macroeconomic outlook. For a country that imports 85% of its oil, $110 plus crude isn't just a number. It is a direct hit to the fiscal deficit, a fuel for domestic inflation, and a major drain on foreign exchange reserves. The geopolitical heart translated into a massive risk off sentiment among foreign institutional investors, sensing prolonged instability fits extend their selling streak to a 17th consecutive session, offloading shares worth thousands of crores. This relentless exit, combined with the spike in US Treasury yields, sent the Indian rupee tumbling to a record low of 93.71 against the US dollar. The sell off was particularly brutal in the high beta sector. The Nifty PSU Bank and Nifty high beta sectors, the Nifty metal incidence emerges as the worst performers, each tanking over 3%. Blue chip heavyweights like HDFC Bank, Reliance Industry, and Tata Steel saw declines to between 2% and 4% as institutional stop losses were triggered across the board. The gravity of the situation reached the Hall of Parliament, where Prime Minister Narendra Modi addressed the Lok Sabha, terming the West Asia situation worrisome. The PM acknowledged the adverse impact on the global economy and reaffirmed that the government is prioritizing domestic LPG supply to shield households. As the market closed on this somber Monday, the India Fear Index surged to a 21-month high of 27, signaling that the turbulence is far from over. From the millions of retail investors who have entered the market in the last 2 years, March 23 serves as a stark reminder that while the Indian economy remains fundamentally resilient, it is not immune to the fires of global conflict.